Hello, Namaskar, friends. I hope you are all doing well. Today, I'm Shanando Dash. A very warm welcome to you on behalf of Elan Markets. Today, we are here, me and Shordip sir. We are here. We'll be discussing global markets. We'll be discussing other opportunities. We'll be discussing Indian markets overall and try to give out our broad outlook so that it can be beneficial for you. I hope it has been going very well so far in the week. And if not, there are a lot of opportunities that are coming up. So we can definitely try out to having a good week ahead. So where I usually start, there I'll start today is the US bond market because this is very important market and especially अभी जो हो रहा है चारों तरफ रिगार्डिंग दिस SVB saga, सिलिकॉन वैली बैंक और अदर बैंक क्राइसिस क्रेडिट स्विस इट इज वेरी इंपॉर्टेंट कि हम लोग देखते रहे कि यील्ड की तरफ बॉन्ड जो इंटरेस्ट रेट कितना इंटरेस्ट रेट मार्केट डिमांड कर रहा है हाउ मच मार्केट इज आस्किंग फॉर to get into US government bonds and other bonds as well. So what I'm seeing after Friday's move, Friday there was a sharp move down, and what I believe we discussed this that this is actually a flight to safety move in Treasury. But after Friday night, there was a comeback in US Treasury bond price fell and yield made a comeback. And today I can see the same continuation happening. So interest rate, if we look at today, US interest rate, 10-year interest rate is up almost 10 basis point at 0.1%, whereas the 2-year interest rate is up almost 19 basis points here. इन अदर टाइम्स इट वुड हैव बीन बियरिश ये थोड़ा बियरिश होता क्योंकि इंटरेस्ट रेट ऊपर जा रहा है तो मार्केट इक्विटी मार्केट और रिस्की एसेट्स के लिए खराब हो बट दिस टाइम सिचुएशन थोड़ा अलग है वी आर इन अ डिफरेंट सिचुएशन हियर दिस इंटरेस्ट रेट गोइंग अप आई थिंक ये मार्केट के लिए पॉजिटिव है क्योंकि ये जो फ्लाइट टू सेफ्टी लोग जो सेफ्टी एसेट की तरफ भाग रहे थे वो अब ऑपोजिट मूव दिख रहा है तो ये अदरवाइज जो दूसरे टाइम पे इक्विटी के लिए खराब होता है शुड हैव वर्क फॉर इक्विटीज और एक ये bond is on US dollar will find some beat and if safety is going away from the market if our calculation is correct Japanese yen should suffer Japanese yen which was performing very well since the crisis happened should turn around as well. So let's look at what's happening in the currency market before we move to other asset class. Dollar index broadly flat. Yeah, on Friday there was a comeback after this hammer formation on the day before, but today there is broadly no move. Overall interest rate spectrum remains positive for the US dollar. और उसके साथ Japanese yen, as we talked about, USD JPY is going up. That means Japanese yen is definitely weak on the day. So ये और एक positive news हुआ equity के लिए और any other risky assets के लिए जो flight to safety इतना दिन हो रहा था, maybe that is now settling down. But are we in a good phase to buy equity? Still no, because as we expecting a much worse time ahead of us. But this can definitely be a bear market rally, which would be beneficial for, especially for those who are holding good quality stocks. Let's come down to USD INR or any other Indian based INR opportunities if you are getting. Broadly, Indian currency, if we look at it's flat, working in a range. Broadly, this is the time we can sell option straddle strangle strategies or non directional strategies. INR is somewhere in the middle, so we can definitely try out these two levels for the option this week. On the event front, except for the ISM manufacturing PMI on the later day, nothing big is coming up on the dollar side of this. What other trades might we be looking at? Japanese yen INR, which was quite a bull after the shooting star, as we discussed. Risk aversion is now fading. Risk on is coming back. Probably equities would be rising. We'll be having look at that. So Japanese yen on the short side for this contrary trade. This is a contrary trade because it is against the trend, as you can see, it's still above lot of moving averages. So it's a contrary trend, but definitely can worth trying. If equity, if the risk sentiment gathers pace, equities will recover further and we'll see further down move in Japanese yen. So this one should be under your radar to look for opposite opportunities, contra side. Let's look at GBP INR. GBP INR moved up very sharply. If dollar is going down, so far there is no sign, and yield spectrum is positive for US dollar. But if dollar goes down with INR operating in a range, GBP INR holds an upside break opportunity. So far, nothing to suggest that we should sharply move to the downside. Definitely, a congestion, very small congestion is broken, but really not that much worth paying attention as we are still in a buy trend. So definitely, a breakout remains an opportunity, whereas we should not jump into a trade due to this congestion break. Now I'm looking at Euro INR. Euro INR is once again formed a sort of bearish candle, but downside momentum is not there, testing out the moving averages. So far, it's more of a neutral. So unless we see a significant break on the upside, and this will come if the US dollar weakens. We need weakness in the US dollar to this one to happen. Euro INR upside break. Let's see, the trend line is still somewhat there, so we need significant bullish momentum from euro, and that remains a possibility because from the global positioning I can witness that the big fund managers are buying it has been buying into euro. So overall, euro outlook still remains on the positive side. Currently, it's down because its banks, equities are getting battered. Credit default swaps are going high. But overall, on the currency front, euro is still significantly not weak to go for a short trade. With the currency done, we'll have a quick look at the commodities. And we have seen that interest rate is going up. If interest rate is going up, that should not be good news for the gold or the bullion holders. And so it is broadly bearish for gold. Let's have a quick look at gold. Yes, after two shooting star, two double top formation, gold is going down. If we short this, go for a short trade, first of all, this support remains because of after such a big candle, price got halted around these levels. So we should be careful of that. But more importantly, gold has been in a quite a bull trend, and this still remains in a contrary trade, going short in gold. And if we look at the weekly chart, this is still we cannot say that this is a fully bearish setup for gold when this shooting star was significantly taken out with a candle that had a shaved bottom. So significant bullish pressure remains on gold. And this cycle, this cycle favors the gold, as we have discussed in the past, that in this cycle of the leg initially gold remains in favor, which is currently the phase. Then we'll see a drawdown in gold, which will be the next phase, and usually in the third phase of the cycle gold does very well. So this still bullish cycle. Those who are planning for a long-term short or liquidating their long-term portfolio, they should have a thought again. With regard to this, let me show you a different screen. And after that, I would like to have Shorodip sir's review on gold, interest rate, and what could be the broad market outlook. Just, uh, just a moment for the other screen. This is the stockage social platform that I'm currently looking at. Those who are of you who are already subscribed to this platform, I'll highly recommend that you subscribe to this club and utilize our report and resources that we are publishing, and try out other new opportunities that lies beyond equity market, because currently our government had reduced the size of the contracts, which is previously 5 metric ton used to be the contract size of aluminium zinc. Now it has been brought down to 1 metric ton, which is almost 1000. So overnight zinc moves around 3 rupees, so 3 into 1000 ATR means average true range I'm talking about. So 3000, with a 3000 risk you can go for a positional trade, or you can look for intraday opportunities in crude oil, where our government has reintroduce the crude oil mini contract जो बहुत पॉपुलर था, काफी लिक्विड बन चुका है. लास्ट नाइट फ्राइडे का जो मूव था इंट्राडे, ऑलमोस्ट 25,000 अपना मार्जिन लगता, वी गेट 20-25,000, 25K is the margin requirement, whereas the overall move, the good move, 2,000 rupees what could have made, I made around 2,000. So 10% was almost close to the margin there. So there lies opportunities for retail players who are trying to try out the luck with smaller amount of money beyond the scope of equities, and it is getting popular, I can see, because from the currency spread, previously used to be USD JPY 50 60 pips difference, but now it has come down to just 6 7 or 8 pips. That means market is becoming more and more liquid previous, so it's getting much better. So please go through this tracker reports. With this, let's bring Shorodip sir in. Shorodip sir, I'd love to have your review on the global markets. What you think of the gold in the coming days and the inflation outlook? Thank you, sir.
Hi. So, am I audible to all of you? Okay. So, right now we are looking at this screen. Okay. Now, my screen is not visible. Yeah. So, if you look at this for last, I would say from 14th of March, we have been spending time in a range. Okay. Now, I think time is ripe for market to have a trending move at this point because uh, tomorrow and the day after tomorrow we have expiry, and possibly post that we will have a trending move. Now, as I can see that here in the case of Bank Nifty, it is trading below the above one is 200-day exponential moving average, and the lower one is 200-day simple moving average. Now, Bank Nifty is trading below this. Nifty is trading below this. So possibly, though we are at a very near to the support zone, if I look at it this way, we are right now very near to the support zone, and still, if once this 16,800 break, we can have a strong fall. Now, the fact that what FII and DI are doing, if I want to have a look at this, so uh, if you see both the market on the monthly basis, that this is the cash market SEBI data, what actually FIIs are doing, you can see that they have bought 10,400, and if you go to the, because for DII you have to rely on the provisional data only, you can see they have bought almost 27,400. So combining these two, almost 38,400 they have bought, but still the market is languishing in the weaker zone. One more important thing here I want to show you is that, see, the entire down move from if I look at Nifty and Bank Nifty from this Fev mid of Fev, the down move in Nifty 18,150 to 16,800, that was accompanied by uh, great buildup of short by FIIs. Now this is slowly reducing because market is not going down. Okay. Now these shorts are actually quite huge. Why I want to tell you, if I go to NSE India and type I type Nifty here. So in the derivative, these are index futures. Okay. So so if I go to the index futures, just a second. So you will see that in a day, and because we are so close to expiry, because that is why rollover is picking up. So combined, you can see 3 lakh volumes are there. Okay. And if you are talking about Bank Nifty, okay, just a second. if I talk about Bank Nifty, again going there, it is showing all contracts. So if I combine index future, it is again 2.5 lakhs. So Nifty Bank Nifty combined, you can have a total volume of almost 5.5 lakhs together. But trust me, because this is an expiry week, so people are rolling over their position. Only 2 days left to expiry. In normal time, when not in the expiry week, you will generally have Nifty Bank Nifty combined maximum 3.5 lakh to 4 lakh. Now, compared to that, if you understand the kind of open interest that has been built up here, you will understand it is huge. Like half of the volume that can be traded in Nifty Bank Nifty, that is put here as a uh, huge open interest by the FIIs. Okay. Now, uh, one important thing that I want to tell you here is that if I look at the global market here, not only Nifty, the global market, like the most important mother market is the uh, Dow Jones. So Dow Jones has taken a firm support around 31,500 to 700 Dow Jones future, and it is right now moving towards the upper end of the range. Okay, so so the way it is shaped right now, that we are near support, the Indian market is near support, the global market is near support. Both FII and DIIs are buying in cash market, and FIIs are heavily short in the futures market. Like, they ideally, this kind of short, if they this short actually they break out, you can have a quick fall of 1,000 2,000 point in the Nifty, 1,000 point in the Nifty, and 2 to 3,000 point in the Bank Nifty if appropriate levels are broken. And that is why it is very important right now to keep a tab on them. Okay. Now, at this point of time, what I also want to mention here is that uh, let us look at the relative performance of Nifty Bank Nifty uh, over the period of time. Okay, so if I go to the relative performance of Nifty Bank Nifty and look from the 2020 bottom, COVID bottom, see Nifty Bank Nifty and CNX IT are the top three index globally. Like, our performance is 105%, 90%, this kind of performance that we are having, and all other are 60%. So we are almost 60 to 80% higher in terms of the COVID lows that we make. But if I go to the daily chart of the same chart in daily and start from 2023, uh, what I will find that Nifty Bank Nifty are on the lower side. Now, this is pretty obvious. If there is a global recession, what will go down? Because today in the market, not only Indian investors are there, the global investors are there. So if there is fire somewhere, to douse the fire, they will sell more aggressively what is there in profit, right? So that is why India is having the most underperformance in 2023, and still we are so much above the other markets in terms of global outperformance. Now, one another important thing that I want to tell you here is that, see, I'm right now moving all these indicators and just hiding Nifty 200 DMA, all these indicators, removing the drawings also. Okay, and now going to the monthly chart. I'm going to show you a very important thing. Okay, now see, here if you look at this, what you will find, so this was the 2019 fall before election, this was before election 2013 fall. Before that, obviously 2008, there was a global financial crisis, there was in general fall. But still, see, in the run up to the election, there was fall in 2004 when Bajpayee ji lost and Manmohan Singh ji became the prime minister. Before that, in 1999, you will find a fall. Okay. So from 1993, every pre-election year has seen a very strong correction in market. Okay. And the correction, though I'm not right now measuring, but what I have measured in past is that it is 13 to 30% annually, barring the obviously the 2008, because this was due to the global financial crisis. So I'm not measuring this fall with other falls. Okay, so if I take any other falls, the market has fallen 13 to 30% in every pre-election year. This year we have fallen 10%. So highly likelihood, and given the global setup, we may again fall uh, more than the other markets. Another important thing that I want to tell you. See, this is the economic calendar, and Thursdays and Fridays we have all the CPI data. So if I'm looking at the CPI data, you will see that monthly CPI data of UK, Germany. So this is Thursday, right? So Spanish CPI, German CPI, Italian CPI, PPI. So see, this is German CPI. So the all the provisional CPI data will come in the in the week later this week, okay, of the March. So this is the first read. These are provisional data. These are uh, right now, if you can see the month on month figure, in spite of so much high inflation, that is, see, Spanish March HCPI, the harmonized CPI, is about to be 1.6% month on month, and these are not year on year. And remember, March is the month actually when Russia and Ukraine conflict started. So we have a huge base effect also. So in spite of that, if inflation is going to go up month on month, then you can understand it is totally right now not supply side inflation. It is totally, a lot of it at least is demand driven. Okay, so uh, the the forecast of German things have yet not come. I think yeah, German CPI, see, month on month, they are expecting 0.7%, which is huge, right? The interest rate are only 3% annually. So, what I feel is that though the Fed and the ECB is all are trying to say that we are near the peak of the rate hike cycle, all these things won't be that easy. Let us see what are the forecasts for French CPI, month on month 0.9%, okay, which is pretty bad. This is the annualized rate of 10 to 12%. And Italian CPI, see, ACPI 1.4%, harmonized CPI. Eurozone, they have not predicted the monthly. The forecast has not yet come. But see, the core CPI year on year is expected to actually go up 5.7%. So these are really, really, and the ACPI X energy and food is about to go 7.5% from 7.4% year on year. So the fact is that inflation will remain high, elevated. So at some point of time, because what the global financial watchdogs are right now trying to be a little bit dovish, because there is Credit Suisse problem, uh, Deutsche Bank is having a crisis of confidence. Its share failed so much, and that's why they are somehow trying to soothe the market. Okay, trying to be a nanny of the market for some time. Now, what will happen is that if such inflation numbers keep on banging month on month, March, April, at some point of time, Powell will go back to this Powell speech, or I will show you Powell testimony to Congress. And this was just 15 days, 20 days back, when there was no SBV crisis, Credit Suisse crisis in the horizon. So, what Powell testimony to Congress? Terminal rate. Okay. So if you see there, you will find that so So see, the Powell, that was the day, I think 8th March, only 20 days back. Dollar plummets as Powell flags higher terminal rate. So it cannot be that economic reality can suddenly change. Only thing is that few banks, due to the kind of durations they are holding in their bond portfolio, uh, there was a change. Like if they are having a duration of 10 years and the yield move 5%, so the portfolio was 50% down. So such kind of losses were in the bank portfolios. Okay, so that's why for the crisis, for the crisis that emerged, that's why to soothe they have actually gone a little bit on the lighter side, and they have said that okay, we won't, probably we are nearing, but if this kind of inflation number keeps on coming back, they will again repeat what they have said, because right now they are allowing time for the uh, financial institutions to balance the risk, buy puts for the bond portfolio, do any kind of hedging, so that the next time they again become true to the market, in the sense of true to the inflation. Then there may a market fall, but there not is a systemic crisis. Okay, one thing is bank run. I think Fed right now was scared because there was bank runs, there was systemic crisis. They are ready to take at this point of time given the kind of inflation they have, and they will be happy. So highly likelihood we will have a very strong bear phase going forward. Be mentally prepared for it. Okay, be mentally prepared for it. uh, right now, highly likelihood that because there are expiries, it will go a little bit higher, but I think eventually we will fall lower. So try to be nimble footed. My first thing is, advice would be, try to be very nimble footed into the market, and try to see the way the market is going to shape up, because right now the way things are shaped up, I strongly feel that inflation is not going to come down. And see the kind of El Nino and El Nino, okay, El Nino effect pops. I'm so now tell me, uh so El Nino effect crops. Okay, so if I go to the news, you will see. Sorry, this is the Yahoo. So this not, I'm searching it in Google. You will find that there is a really bad possibility of a very bad kind of a uh, uh, inflation, and bad kind of crops. Okay, so how will actually then, if the crops are bad, everything is bad. In Rajasthan few days ago, hailstorm, and see the crops were hugely damaged. Okay, so you can say rains and hail destroy standing harvest and crops. Okay, so you can understand the kind of situation we are having. Food inflation is not going to come down, and then how will the inflation come down? So be mentally prepared at this point of time for a very strong fall, given all the situations are right now confluencing. Probably below 16,800, we will quickly move towards 16,000 or 15,800. In the case of Bank Nifty, I think uh, below 39,000, below 39,431, we will, I think we will have a very strong fall. We will have a very strong fall, and possibly we will go towards 37,000, and we can go towards 33,000 also, eventually 33,000, 32,000. But just before finishing, I want to come back to a small point that uh, that I every time mention in every session right now, and this is the Nifty P ratio. Okay, so just a second. So I'm going to this link. Just allow me a moment. So I'm going to this link. Before going into this, I just wanted to show you. See, right now, our market is below the median P that we are in. Okay, so we are at 19.97. Apart from very steep crisis like 2009 or this is the dot com bubble, we generally drop to 14 and 15. Okay, so the possibility that we can fall 15-20% from here. But if you see on a longer term, this is the median or mean P that we have reached. And so I think that the valuations are quite good. So these are the levels where people generally invest from 2009, if you see, and they can stretch up on the high side 30 to it goes to 30, it goes to 28. So valuations are very lucrative right now. Obviously, they can be 20% cheaper from here, but still, uh, this is the time. The next 1 or 2 years would be the time for someone to build portfolio. Obviously, we'll see short-term pain, but if you invest at these levels or maybe 10-15% lower on a broader mutual fund level, I'm not talking about stocks, there is very little chance that you won't make money over the next 5 years. And also, these are the times because on the short side market moves fast. These are the best of the times to make a lot of money on the when the market moves on the downside through the short trades. Now I will like to uh, give it back to Shanando. So Shanando, please have it from me and you can conclude. Thanks for the wonderful description of the currency and the commodity sections that you gave us. I tried to share my overall perspective. On a trading wise, medium term bearish, short term still expiry, nothing very, I would say, concrete. And in a medium term bearish, and beyond this medium term extremely bullish. Okay, so this is from my side. Please take it over.
Thank you, Shurdev. There's such a lovely analysis. We have almost come to the end of our half an hour period. So I'll have just quickly conclude with a few more look at the commodities. A quick look. Gold is falling further. So flight to safety is now reversing. This is a bad sign for those who are bulls. Definitely some booking were needed with this double top and short still not. I'll not be aggressively looking for short opportunities, but definitely if this today is missed, I'll recommend wait it out at several moving averages that are coming up. If short is looking more lucrative, then tomorrow we'll have a better opportunity. I'll once again promote that it's an opportunity to, if you, even if you are an intraday trader, to look at commodities. Commodities once again, crude had a wonderful rally, good rally today, and even above the moving averages, they are giving good rally. So 5717 to 5835, or even break at this level 5800. These are a good amount of return compared to the margin will be providing. Any other outlook is zinc. Zinc is broadly in a range in the intraday and on a positional basis, still broadly bearish. Lot of queries are coming up. What should we do in natural gas? Should we go for a buy? I would definitely not go for a buy trade in natural gas. It's clearly bearish. A majority of the fundamentals are bearish in natural gas. This is a break. If we can expand the chart, you see there's a clear break attempt, at least an attempt to clear this bullish engulfing. So it might come back, but this is not the time to buy. Even if it come back, it will come back and go up here. So you can have a much bigger ride rather than jumping at this support to take trade. Market remains fully bearish, and even in short term, it's even in short term, it's quite bearish. extremely bearishness is going on in natural gas. So I'll definitely not recommend going for a buy trade. It's completely remain short. How far we can go? Pretty deep we can go, but natural gas is vulnerable to a geopolitical shock. Any major news coming out of Russia, we can see significant short covering as this rally has been continuing for a very long time. But fundamentally, all majority of the factors remains fully bearish for natural gas. And last of the counter, I'll have a quick look at the copper. It was showing some bullishness, but last week it did not work. But now it's trying to come back with forming of this doji candle. So let's wait it out how it goes with copper. But overall, base metal, some fundamentals are positive, some are negative, so mixed outlook. And if you're interested in this multi-asset trading or diversifying your portfolio, you can definitely reach out to us. We both are mentors to our Elon Markets flagship program, which is multi-asset trading mentorship program. I'll definitely, and I think our students should also definitely, as you can see from the review, the students have also would recommend this course highly. So if you're interested in multi-asset, gaining a broad perspective of the markets, how it plays out, rather than just looking for one or two strategy which will expire at a certain point in time, unless rather than looking at broad understanding, I'll definitely recommend joining this course, especially for newcomers. Thank you so much. Thank you, Shorodip sir, for such a wonderful session. See you in our all in our next session. Thank you very much.